Good afternoon. Good afternoon. It's Monday, the 22nd of September, and welcome to another edition of Monday Market Picks. My name is Thilan Wickramasinghe. I'm data research for Maybank Securities here in Singapore. Now, the markets have gained fresh momentum after the US rate cuts, and also Japan coming out today, the Japanese central bank coming out today saying that they're easing concerns over their planned offload of ETFs. And in Singapore, the Nordex numbers actually for August came in a little bit behind expectations, but our macro team is not particularly worried. They still see a lot of positives from manufacturing coming up, as well as falling interest rates to keep their forecast for 3.2% GDP growth very much intact for 2025. So all of that is actually very positive for Singapore equities. And today in the morning, we had SGX announcing new indexes that look beyond the STI 30. And we think that's another shot in the arm for Singapore equities. And I'll give you my 2 cents worth during the show. And then we've got Singtel, which is down 2% this morning after a big outage in Optus last Saturday that actually failed users from making emergency calls. We will unpack that. Then we will actually focus on 2 of these new next 50 stocks that SGX's indexes show, ComfortDelGro and Food Empire. We've got some fresh notes out from Eric and Jarek on those. And then we go over to the Philippines and hear from our head of research there, Kerwin, who says it's now time to say mabuhay to Philippine stocks. And then we got some fresh buys from our chart guy as well. So, but let's start with the big announcement from SGX this morning. They're launching 2 new indices, the iEdge Singapore Next 50 Market Cap Weighted Index, as well as the iEdge Singapore Next 50 Liquidity Weighted Index. So 2 different indexes for different investing styles. Now, both of them specifically target non-STI stocks and focus very much on tradability, efficient liquidity, and replicability. While these indexes may not, now this is my 2 cents worth, okay, might not boost liquidity directly, they will help attract investor interest, and that's important. Remember, the EQDP program from MAS wants to channel more funds into small and mid caps on the SGX. Now, this is a vast sea of stocks, and many of them actually struggle to meet the liquidity and market capitalization criteria to absorb the investments that will come from institutional investors. Remember, the EQDP money is going to institutional investors, so they will have to use institutional metrics to actually invest in these stocks. So developing indexes like this that take factors that are important for institutional investors will help guiding some of these investing decisions. And it'll also help set some performance benchmarks for professional investors. And I think once you start to see some ETFs being created around these indexes, I think that will actually help retail investors also to take part much more easily and much more directly in these small and mid caps. And that'll actually provide a boost to liquidity over the long term as well. Now, I want to highlight though that, just having indexes alone is not going to just give a big jump to momentum or to enhance liquidity in the small and mid cap sector. A lot of for many companies, institutional investors will want to look at will need a lot more deeper structural reforms as well. Now, these include better free floats, improving trading multiples through balance sheet and business model optimizations like what we've seen with some of the large caps, and also fostering better communication with investors. So better IR, better communication with the street and with analysts as well. Only then can we expect some meaningful changes to drive the greater investment participation in this sector. Now, what we are hoping for with the next MAS set of reforms, hopefully that will be out anytime soon, that some of these factors will be addressed, and some of these factors will be the focus of these reforms. So let's watch out for those. But until then, I think this is moving in the right direction in terms of the overall market reforms that we have seen the EQDP and the MAS has undertaken. Now, with that, let's move on to some of the stocks that might benefit from these index, the next 50. And one of those stocks that's in that index is ComfortDelGro. Now, Eric can't join us today, but we have Sharil, who's actually interning with us, and she's going to be doing a deep dive on Eric's report to take us through her findings. So, Sharil, welcome to the show. Now, ComfortDelGro is a constituent of the IEdge Singapore Next 50 Index. But now this is a stock that has been a big underperformer so far. I mean, it's trailed the STI by about 5% in the last 3 months. But this is about to change with a big earnings boost coming from Copenhagen. So, Shiril, what can you tell us about this deal?
So ComfortDelGro and RATP Dev's joint venture consortium, KBH Metro Partner, has been pre-qualified to bid for the operations and maintenance contract for the Copenhagen Metro. So this contract is worth about 2.4 billion euros over a 12-year starting period from September 2027, with a possible extension of 3 years. So ComfortDelGro's share of this contract is estimated to be around 750 million Singapore dollars or 62.5 million Singapore dollars annually. So the tender submission is scheduled for the first quarter of 2026, with an award likely around the third quarter of 2026. So based on the historical track record, the group has said that its success rate is above 50% for new tenders and more than 90% for tender renewals. So if successful, this win would boost its overseas earning base and diversify its revenue streams, which will help close its recent performance gap with STI.
Okay. Now, but obviously this JV, the earnings boost will take some time. I mean, towards the end of 2026. What are some of the other initiatives that ComfortDelGro has undertaken that you think can boost immediate earnings?
So I think firstly, ComfortDelGro has recently acquired the remaining 46.5% stake in CityCap from ST Engineering for 116.3 million Singapore dollars. So value at 3.9 times adjusted EV over EBITDA and 13 times P over E. This deal is expected to be EPS accretive to ComfortDelGro. So the group will see about like 4 months of earnings contributions in 2025 from its additional stake in CityCap. This will add about around 2 million Singapore dollars or about 1% to our earnings estimates. So with this full ownership, ComfortDelGro can strengthen its core point-to-point businesses in Singapore and globally. So secondly, ComfortDelGro will also invest more in its ZIC platform and introduce differentiated service offerings to maintain competitiveness in the ride-hailing market. And thirdly, starting from September 25th, ComfortDelGro will start booking doorstep pickups for cross-border taxi rides. So prices of these trips will range from like 60 Singapore dollars to 120 Singapore dollars, depending on the pickup points. However, because only 90 taxis out of their fleet of 8,000 taxis are licensed to do these cross-border services, the material financial impact of this would be insignificant compared due to the small volumes.
Okay, thanks, Shreya. I've actually been spending a bit of time in Johor over the last few weeks, and it is quite interesting to see the pace of the Johor Singapore SCZ and the progress that it is making. So I think there'll be a lot more demand coming through for cross-border travel, particularly from a business segment as well, and not just the weekenders going forward. So I think that'll be quite a bit of a boost as well. So ComfortDelGro, we got a buy, big laggard. Do have a look at the stock, and Eric's detailed note is in our newsletter today. Now, before I move on to another index stock, I do want to highlight Singtel on the aftermath of the Optus network failure last Saturday that actually prevented calls to emergency services. A network failure at Singtel-owned Optus during an upgrade actually caused four fatalities when you know 000 calls could not be made. That's emergency number in Australia, and this is Optus's third major issue in 3 years. While the financial penalties alone could reach around 100 to 200 million, the bigger risks are reputational damage, consumer backlash, and enterprise client losses. So something that we'll be monitoring quite closely. The Australian government has said that Optus has led Australia down. So, I mean, that's something to keep a note on. Now, when you look at the previous crisis that Optus has gone through, the overall financial impact has been manageable. But given the fatalities, we think there will be near-term pressure on the stock. We are not changing our buy call. We are keeping a buy call on Singtel, given the momentum on the data center story, as well as lower competition or more rationalizing competition in Singapore, which are independent of Optus. So we continue to keep buy, but I think the share price will have an impact or will be under a bit of pressure over the near term. Now, with that, moving on to another next 50 stock, Food Empire, which has actually outperformed the STI by 32% in the last 3 months. Now, Jarek actually says there's even more upside left. He recently traveled to Vietnam to see their facilities. He's not in today, but we've got analyst Zuan Hao who will be joining us to take us through the latest on the report. Now, Zuan Hao, how is Vietnam's earnings for Food Empire tracking? And where is it expected to land in 2025?
Hi, Dylan. Thanks for having me on the show. So currently, we track that Vietnam's earnings surged about 37% year on year on the first half of 2025, which directly contributed to a stellar Southeast Asian segment growth of 25% year-on-year growth in first half, which is about 77.5 million. And as of where we expect it to land for 2025 full year, we're expecting Vietnam to perform even better this latter half of the year, reaching about $100 million for 2025. So it's highlighting our optimism that Food Empire's planned product innovation to grow revenue in new segments.
Okay. Now, can you give us some more color on the market positioning and growth on the ground in Vietnam for Food Empire brands?
Yeah, so in terms of market positioning, we note that they are currently the third largest instant coffee player in Vietnam. And as for the growth on the ground, primarily in terms of demand side, we see that about 90% of Vietnam's sales are coming from the Cafe Pho product line. And this of this sales, 88% are being sold via general trade outlets. So this is important, so, as these general trade outlets can be considered to-go venue for a local's grocery run. And it indicates that Food Empire has actually gained market share from key competitors. So furthermore, on the supply side of things, management plans to increase the production capacity of Vietnam's facility by 15% in 2026 and another 30% in 2027. So this highlights the confidence that they have in expanding their Vietnamese markets.
Okay, now one of the areas that investors have been worried about is their exposure to Russia, which has been traditionally a big market for them. How are they managing this risk?
Yeah, I think as for Russia, we believe that it will contribute an increasingly smaller revenue proportion in the coming years as they diversify across Southeast Asia, India, and Kazakhstan. So particularly in Southeast Asia, where it's geopolitically more stable in these current conditions, we'll see a greater interest paid towards this as a result of the US trade war waging on.
Okay. And what are our expectations for 2025? How are we expecting to end the year for Food Empire?
Yeah, so I think this is much more, this will be very optimistic. We expect revenues and margins to remain strong in the second half of the year. So as mentioned, the Vietnam market should be the main growth driver for this latter half. And we expect margins to continue widening as raw material prices lowers. Also, with the strong pipeline of projects continuing, this will provide long-term growth prospects for Food Empire. So at the same time, I think one thing that Jarek notes is that he believes that there might be a possibility for a bonus share issue to improve liquidity and reward shareholders as well.
Okay. I mean, I think liquidity is one of the key areas that we really need to focus
Yes,
on for
definitely.
small caps. Right, thanks, Anna, for that. Now let's go over to the sunny Philippines. The market has been a bit cloudy though. Let's welcome Kervin, who's our head of research in the Philippines. Kervin, welcome to the show.
Hi, good afternoon. Thanks for having me on your show, Tiran. Yes.
Great to have you. Now the PSC index is one of Asia's worst performers, and on a PE basis, you actually say Philippines is one of the cheapest markets in the world. How did it get here?
Yeah, so you're right. So I think in terms of versus ASEAN and also other Asia peers, I think Philippines is the only one that's in the red year to date in terms of US dollar currency wise. So, and we are trading at only what 9 times 2026 PE. So we are single digit PE compared to most of the peers in Asia and ASEAN that already above 10 times. So for Philippines, admittedly, we are at the mercy of our currency. So relative to our peers in the region, peso has been relatively weaker. And we've seen, at least for the Philippines, a stronger peso typically translates to stronger Philippine equity markets. And if we look at most of the companies here in the Philippines, we do expect margin expansion when we see stronger peso because we are an import dependent country. We import our food, we import our fuel. So more money in the pockets of Filipinos and stronger consumption on a stronger currency. So, and as mentioned earlier, due to the weakness in the currency, then that resulted to the weakness in terms of the overall market.
Right, right. I mean, even now there's protests ongoing in the Philippines on corruption as well. So, what is different now, and why should investors start paying more attention to the Philippine market?
Sure. So we are starting, as you mentioned, we're starting to see a lot more protests on the ground. Generally, it has been quite peaceful. There's some conflict here and there, but it's very isolated in terms of cases. I think one is, as you mentioned earlier, valuations are very cheap in the Philippines. Growth is still quite intact because about more than 70% of the economy is still driven by domestic consumption. So we see a lot of the companies here still doing well, providing you 15% to almost 20% earnings growth. So, and as long as we start to see the Fed cutting rate, so the interest rate differential should be a lot better for Philippines, then at least the overhang on the currency should be resolved already.
Got it. And where do we go from here? What are the catalysts do you see in the horizon? And also, what are your top picks?
Yeah, so in discussion, our topic is mostly consumer related. For example, Jollibee and URC. So we're seeing a lot of upside for these two, and at the same time, earnings growth will be around 15 to 20% for Jollibee and URC. So as mentioned earlier, a stronger peso typically provides better margins for Philippines, and that's what we're expecting for both Jollibee and URC. As raw input material prices have been coming off. So wheat prices have been coming off, oil prices have been coming off. So those will translate to better margins for the consumer stocks in the Philippines. We've also looked into ICT as well as one of our topics. So ICT is the port operator in the Philippines, but do note it is an emerging market operator. So with now the concerns on trade war and tariffs from the US has been dying down after the Liberation Day. Then there's a lot of scope to look at ICT again. And we're starting to see a lot of interest in ICT. Margins also are been improving on ICT, so we expect volume to improve from here on.
Got it. Got it. So that you can see on screen our top picks for the Philippines. I think, when you have laggard markets like this, when you have, most of the other major markets on a bull run, it is very important to keep it on your radar. And there's few catalysts that are coming as well. Kervin, thank you so much for joining us.
Thank you, Ted.
Now let's move on to our chart guy who's got two new trading buys. One is UMS integration. It's now testing their 50-day SMA line, where a breakout could trigger a bullish continuation move. So do have a look at UMS integration in note today. Plus, we also have TIANJIN Pharmaceutical as well. It's currently consolidating within a triangle pattern, which could be a precursor to its next leg higher. So quite interesting chart there on TIANJIN Pharmaceutical as well. So do have a look at that as well. In terms of data and announcements that's coming up, we've got the important one. We got inflation coming out on the 25th, and the important one is 26th of September, industrial production. I think that feeds directly into our GDP forecast in Singapore. So we will be keeping a very close eye on that in terms of where the direction goes. Plus, we got retail sales on the 5th of October. And then the unemployment rate on the 15th of October. With that, we are out of time today. Thank you so much for joining us. Have a profitable trading week, and we'll see you next week.